Good morning everyone, this is Haralambos Pissouros, Senior Analyst at IronFX, bringing you the morning comments for the 9th of November. Trump wins the US presidency and markets panic. American citizens elected Donald Trump to be the 45th president of the United States. It has been a carnage around the markets throughout the Asian morning, with massive risk of moves, possibly due to the uncertainty surrounding many of his policies. In line with our expectations under a Trump win scenario, the largest positive reactions we are seeing in safe havens, while the biggest slides came in the currencies of the nations with heavy trade exposure to the US. Global equity markets tumbled as well. So let's start with the collapses. Both the Mexican peso and the Canadian dollar dropped like a rock against their major counterparts, probably as a result of Trump's protectionist views and the increasingly realistic scenario of NAFTA being renegotiated or scrapped altogether. Pro-risk commodity currencies such as the AUD and the Kiwi plummeted as well as investors turned away from riskier assets. We believe that part of this reaction is also to market participants pricing in a higher risk for increased protectionism globally, something that would particularly hurt the economies of export-focused nations like Australia and New Zealand. According to the dollar index, the dollar also slid, but not as much as the aforementioned pro-risk commodity currencies. This is also evident by the fact that crosses like the Aussie dollar and the Kiwi dollar traded south. European equity indices are all in the red, taking their cue from Asian stock markets. We consider it highly likely that US stock markets will follow suit when the US opens. Meanwhile, safe havens skyrocketed. The Japanese yen, the Swiss franc, and precious metals such as gold went through the roof as market participants turned to the security these assets offer. However, we should note that even though dollar Swiss tumbled, euro Swiss remained relatively flat throughout all of this, implying that the S&P was probably active in the FX market to curb the franc's gains. We expect the bank to remain in the market in the coming days and to continue to stabilize the franc, at least until the election dust settles. Our preferred election proxy, CAD JPY, fell off the cliff as Canada's trade ties to the US and the yen's safe haven status led investors to sell the pair. Moving forth, we expect these reactions to continue in the near term as market participants digest the outcome of the election and uncertainty mounts further with regards to the future of US economic policies. What amplifies this argument is the fact that now both the Senate and the House of Representatives are controlled by Republicans. So this implies that if Trump has the full support of the Republican Party, he can even push some of his controversial policies through Congress, including a highly expansionary budget, as well as renegotiating the various trade deals he claims are hurting the US. However, investors have already started taking profits on their bets after the outcome became almost certain. Therefore, we see the likelihood for these corrective moves to continue for a while, perhaps for today. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Haralambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.